At Just Capital, we've been conducting more and more research on the links between performance and the prioritization of stakeholders as determined by the ESG metrics that we analyze. This slide just isolates Q4 of last year. The big trend across the research we've done the last couple of years is that there are correlations between companies that score better on human capital metrics and outperformance compared with their peers who don't perform as well on those same metrics. So if you're looking at the slide, D1, that category of D1 shows the top decile companies in terms of worker issues compared to the lower performing D10 companies or the bottom decile. So what you can see here is that those companies that perform better on our metrics related to health, benefits, DEI, and career advancement outperform their peers. That orange bar is the spread, the difference between top and bottom performers. I'll note here, you may be looking at the far left side, which is that wages category. Just a quick note that I wouldn't read that as companies performing well on wages typically perform worse than their peers. Rather, it's important to note this was one quarter in which we had a couple of outliers in the consumer discretionary industry. That included Burlington stores. Last year had a really strong stock rally, and there were a couple of outliers that impacted those Q4 numbers for wages. But if you broaden out beyond Q4 and just look at the year in totality, you'll see that the companies in the top decile actually did better in terms of wages other quarters of 2022. I'll just note, just feel free to check out Just Capital's website. We have additional research on outperformance of companies that prioritize ESG, and again, especially the human capital metrics that we look at.